Okay, hello everyone, and welcome back to another of our sessions. Today we're going to be looking at the weekly market outlook. My name is Nana Alexander, the XAUUSD, and I'm bringing you this class basically courtesy of Anzo. Okay, so today we'll just look at some market overviews of some pairs or some instruments, look at some potential trade ideas and what we can expect for the week. But remember, on Tuesdays and Wednesdays, we have our cutting-edge trading room where we look at more instruments. And then on Telegram channel, I tend to post out trade ideas and trade signals. So far, so good on the signals. Yeah, a number of them have hit stop loss, but if you look at the way the trades are setting up, in terms of risk to reward ratio, we're still profitable nonetheless. This is the advantage. This is here is the key to success in trading. It's not about how many trades you win or how many trades you lose. It's about, people are usually bothered about taking losses, and what they should be bothered about is not taking losses. So you can see somebody who takes a trade, makes out of 100 trades, win 99. That doesn't mean they are profitable because they win 99 trades. More often than not, what you find is that is the one trade, just one silly trade, that tends to blow up the whole money. Okay, so you need to understand that it's your edge in the market. It's not just about winning, but it's knowing when to exit the market for losses. So losses are part of the business expenses. So so far so good on the trades idea from Telegram channel. In terms of risks, in terms of percentage win, I think most of a good number of the trades ended up in loss. But in terms of wins, actual wins in terms of dollar value, based on the risk to reward ratio for the losses against the wins, we are up by quite an amount. Okay, so and also it's very good to understand that those trades I give you are trades I too myself take. Now it doesn't mean I put all the trades I take there. No, I don't. I just put the selected few. Okay, so now I wanted to just quickly do the overview of the DXY, which is the dollar index. It measures the strength of the dollar against the major baskets. And I mentioned the fact that basically just looking at this charts here, right, from all the way back in October, we had this movement. The dollar was bullish over the years, went bearish, went into bullish mode, went back bearish. And now we appear to be shifting back bullish. So we're in between, but just let us track where we are in the stream of time. So from this high, price, basically from this low, price went up to this high, and you'd expect price to come up and take out this high. But that did not happen. Price failed and then broke down here. So price broke down here, came back up here. So this is now a new high, a low to a high. Okay, so we're just following price. Okay, so this will be our low to our high, our low to our high. Okay, this would be, yeah, nothing. This will be the low. And so right now we are in this range, right? So the reason I drew this out is so we know exactly where we are. So I'm just going to take that off because now we've identified what specific range we are. We are in this range. So this is the high, okay, and this is the low. So this is going to be our structure, the structure that price is in. Now, basically looking at this structure, looking at the previous price movements in the past, you know that we're in a bearish market and we're still bearish, right? We're still bearish because the first sign of bullishness, the first sign doesn't mean we're now bullish, but the first sign of bullishness on the dollar would be for price to break back up above this high. So this here is what I'll tag to be, for those of you who join my classes, I tend to call it, and I'll call this protected high. So this will be like protected high because the market movement is bearish and price is retracing. So if price wants to begin to go back bullish, right, at least it needs to at least stick out this high. However, if you look at the intermediate price structure, right, so this is daily chart. If you look at the intermediate price structure, if we go down to, let's say, the 4-hour chart, you see the price on the 4-hour time frame is quite bullish, right? So because, we went from being, we went from being bearish, right, lower lows and lower highs and lower lows and lower highs and lower lows, okay? And then we broke away from there and made a new higher high. And then we made the higher low and the higher high and the higher low and the higher high. And we still made, this is still a higher low, just absorption. And we're probably going to go and take out this high. So on the 4-hour time frame, we're bullish. On the daily chart, we are bearish, we're still bearish. And if we use the overall daily structure in terms of the SNDs or the leftover balance, you see that there's an imbalance here. This is the last basically, let's just filter this to this candle. And we are at this point now. So if price, here's the thing, if price wants to go down, right? So if price wants to go down in the overall direction of the daily direction, the higher time frame structure, then what that means is this would be our target with regards to our liquidity target. Okay, so I'm just going to call this daily liquidity. Okay, so just call it daily. So that will be our daily liquidity targets. Now, this doesn't mean that we're bearish, right? We need confirmation to really begin to sell, because you can see we're still bullish on the 4-hour, right? So the dollar is still looking strong. However, the only time I'll get really interested in buying the dollar is if I see the dollar begin to break out of this highs. That's the highs that I'm interested. Now, that's the only time I'll really I wouldn't even be aggressively looking for buys. I'll be waiting for sustained bullish move. On the other hand, if we break above here and fail back down, I'd anticipate this move down here. Okay. Now remember, we're not trading the DXY. Obviously, you can, but I'm not trading the DX. I'm just going to use this as a benchmark for the dollar. Okay. So we know that the dollar is in a bearish state, right? But we are in an intermediary bullish move, okay, on the 4-hour time frame and mostly and lower, basically. So with this in mind, so if I was to set areas to watch to be this high, okay, it will be this high and then this low. So if we close below this low, then it's a space that price is going to come back down here. Otherwise, if we continue to fail and break above this high, then one of two things could happen. We could my first guess would be, if we break above this high, we basically just a fake out, and when price comes down. Or if price breaks above there and we sustain it, and then we push back up. So, but for right now, we know what we're dealing with in terms of the DXY on the long-term basis. On the long-term basis, that's one space. So now let's use this concept, knowing that the dollar is strong on its intermediary time frame, on the smaller time frame, but only it's bullish basically on a smaller time frame. By smaller time frame, I mean 4 hours and lower. But the daily time frame and higher, it is bearish. Okay, so now take that information and we push ourselves over to other dollar-denominated basket, beginning with XAUUSD. Okay, so if we go to XAUUSD here, you'd see that. So I don't know how many of you were in my class on Friday. So, but I showed you from my analysis on Friday that anticipates the XAUUSD being, XAUUSD have been very bullish. I still anticipate bullishness in the market in terms of the way price is moving. So let me just go up to the daily time frame here so we can do that top-down analysis in that format here. Okay, so basically I have this area as primarily as the liquidity target, but I wouldn't rule out this high. So this high too is actually quite significant, because this whole big move here is kind of like a flush move. So it's interesting because of the way this move is here. Chances are, if we manage to come back up here, we might fail back down. But on the other hand, looking at the structure of price, we're looking for the bullish move. So I think what we'll do is we'll take out this target and just keep this one as a target. Now, this doesn't mean that we're going to see price push up from here, right? What it means is, what it means from the way I explain or understand the market is, as long as price does not close below this low, chances are the higher probability is that price is going to come and take out this high. So we have like an 80% chance, or let's say 70% chance of price coming to take out this high, as opposed to the 30% or 35% chance of price coming to close below this low. So we're playing the probability game here. Okay. So we're playing the okay, so yeah, sorry about that. Now, so basically, with the understanding of our overall structure and where price is headed, the path of least resistance for price to continue to go up. Hence, I'm looking for that push high. Now, if we combine this with our understanding of the DXY, which we just reviewed, now we said the dollar is strong on a lower time frame basis, however, is weak on the overall higher time frame basis. So with that in mind, a weak dollar in XAUUSD favors a bullish move. right? Now, it's not always, it doesn't always going to work like that, but that's the whole general idea. So basically, I'm bullish on XAUUSD for the week. That's what it means. It means I'm bullish on XAUUSD for the week. But here is the thing: what are the situations, or what are the conditions around this? Now, as long as price does not close below this low, if price close below this low here, I would stay away from the market and just watch, right? Or wait for a better setup. But if price doesn't close below this low, and if price goes above this high, it's just from where it is now, I'm okay looking for buying opportunity. And which is why, for those of you on the Telegram channel, you know that I sent out this trade I did. How many of you saw this from the Telegram channel? You know, I just sent this out not long before the class started, anticipating this move to the upside. So this is about a 1:3.5 or 1:3.35 risk to reward ratio. Okay, so if we're wrong, we know we're wrong. We quickly know that. Otherwise, we anticipate the move upward. So this is a trade I'm currently in. I took this just before the class started. And now remember, this is not financial advice. Or trading carries risks to ensure that you are obviously trading with that in mind. Okay, so basically on XAUUSD for the week, I am bullish as long as price does not close below that low that I showed you guys there on the daily time frame. You see some of the trades I took here. I sent out some of them as well. I took a trade here. Last week it was a win. It was like a 1:2. Took another trade here. It was also 1:2. Both of these trades, I was expecting price to continue to run. Now, some of you would know how I look to manage my own, how I look to manage my trades, in the sense that so I have specific ways to manage my trades. So let's use this trade for instance. If price gets to this target here, I'll close out 50% of my positions and I'll allow the rest to run. My stop loss, I wouldn't move it just yet. So if price continues to run, right, then I'll adjust I'll adjust my stop loss to break even. Otherwise, if price comes back down and take me out, it will be that I've made, it will be a let's say I took out 50% here, I'd have been net positive already, right? Maybe something like slightly 0.something% of my accounts. Okay, so that's the whole idea. So if price gets to here, I take out a portion of the trade, and if it continues to run, remember that the whole idea is, remember what we're anticipating. On the higher time frame, we're anticipating that price wants to get here, right? Here. So if I'm able to get involved, this is how I get into those positions where I get crazy risk to reward ratio. So some of you know me that I get, who have been in my class for a number of years now, knows that, well, sometimes I talk about those trades where I end up being like in terms of risk to reward ratio with like a 1:40 or 1:30. It doesn't mean that I'm holding my entire position. It means I've partialed out and I'm just riding the trend, because remember, the trend is your friend, and I like to take advantage of that. Like there were some trades I took in here, right, somewhere around here, which I ended up I only closed them around here. This was where I actually closed the trades when price began to go to this. I didn't close at this high, but when price began to fail back down, I closed somewhere around here. And this were for several, for a long time, like almost 2 months, right? But doesn't mean I was holding the entire position that long. It means I've partialed out, the market moved and never came back to my entry. So that's how I tend to do some of those. Okay, nonetheless, you have the idea of what I am looking for on XAUUSD for the week. Some of you might already be in this trade with me. That's fine. If it comes back and hit our stop loss, that's fine. We move on. We look for another setup if we find a presentable one for us. Otherwise, if it goes on to hit our runners, we close the +1% for the day on this one, let the rest run, and yeah, we'll see how that goes. Okay, so that's XAUUSD analysis for me for the week. I'm bullish, looking for bullish continuation on this one. Now, remember, anyway, we don't need to talk about this. Now, let's also go to EURUSD, GBP/USD. They're not doing anything really interesting. I've not traded EURUSD or GBP/USD for a long time. The last time I did anything on EURUSD was where was that? I think it was somewhere here, right? So all along, I've just been waiting for price to get to here, and you see price has gotten there. I think I sent out, I think we in our last in my last weekly market outlook class, I talked about anticipating price to come down here. Yeah, I think I sent out, yes, we took a trade I sent out that one on the Telegram channel too as well. For EURUSD, it was a sell trade. It was basically a sell trade based on the lower time frame trend. I think it was somewhere here. I don't know if any of you are in the channel remember taking this trade. So it was a trade that just triggered and hit our take profit. It was a 1:2 instant, 1:3 instant runner. It just triggered and then went onto our area. So, but this is not, I closed in this particular trade, I closed out all my profits here. I didn't let it run because in this particular market, I am more bullish. You know, I'm waiting for the bearishness to come in. So that's where we are. So, but on this one, here the thing is this. Well, I'm looking at this and I'm like, on the higher time frame, this area is an area I'm interested in. So I want to see price begin to show bullishness from here. So until we see that bullishness, there's nothing for me to do here. So what I will tell you, this is the 15-minute chart of EURUSD. So I'll give you areas to watch for the week. So if we get a break above this high, so I'm going to give you the parameter or the premise for this particular trade idea. It's such that if we get a break above this high, right? So let me try and annotate here. Where's my so because if price breaks above this high, okay, this 15 minutes high, then you can begin to look for buying opportunity. But I wouldn't use the 15 minutes per se because it's such a low time frame. So, however, because if you notice this looks like some sort of market, or what I call it, kind of like the market manipulation of the weak to strong hand transfer. So those of you who join my classes on Wyckoff schematic or Wyckoff theorem would understand basically what is probably going on here. I'm not saying this is what is exactly going, but this is probably what is going on here, where the market is approaching. So notice this. This is how the market accumulates or distributes price, right? So when the market wants to make a particular move, so for instance, let me show you this, for instance, right? So this is the daily chart, right? Now, I might not be able to go zoom in and show you the exact Y curve, but you'll be able to see it. You'll be able to see it if you'll be able to see what's going on there, basically. So price started to go high. So let me change this color. Let me make it yellow. Okay. So price, white. That's good. Okay, so price from this low here, began to make higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, right? Now, in some cases, price would make a proper pullback and then continue. While in other cases, price will just make a small pullback and continue, right? Now, so you can see here we had a proper pullback, here we had a small pullback, and then here price made a proper pullback. Now, when price did this, push high, pull down, it didn't just go up immediately. What you found is it's kind of ranged, right? So this kind of movement here, if you go down here on the smaller time frame, you probably see some sort of Wyckoff schematics where price goes back and forth, clearing people who are trying to sell, clearing people who are trying to buy, and then eventually make a decision as to where it wants to go. So usually those are accumulative or distributive schematics in the markets based on the Wyckoff understands. So probably would see some Wyckoff schematic here, then price push up after accumulating enough orders, and then price pull back down, and then we have another somewhat Wyckoff schematic here, and then price push up again. Okay, so the same idea, right? The same idea. If we go over to where we are now, so I'm just going to draw over this, right? So price came from this low, started making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Okay, and then pull back. This is a break of structure from this low to this high, and then I identified the area of interest based on other blocks based on imbalances. That's the area I identified, this gray box here. So basically what I'm anticipating is somewhere within this box, I anticipate so here's the point. If price really wants to continue to go up, right? First of all, it's most likely not going to close below this low. Now, it's possible it closes below in terms of absorption and then instantly continues to go up. But chances are, well, it doesn't want to go below this low because think about it. The composite man has bought a lot of orders. Okay, so they are holding price up from this area. So they're holding prices up from this area. So all those lots of trades that they are in on, which is in profits, if price goes below here, would begin to, drag down. So they probably want to hold price above it. But here's the thing, we are assuming, because the truth is, it's possible that the composite man has, exited all their buys and have sold heavily into this position from somewhere around here and are looking to just distribute orders to trick you and I into buying and then taking price for that down. So we don't know for a certainty. But we understand that in a bullish market, price is most likely going to go up. So we're using that understanding to trade the market. Okay, so speaking of which, in line with that thoughts, this area here is an area of interest. That means if price has come into it, if we find a good enough trade, I am willing to risk money on it. It's all about risk, right? So if I find a good setup, I am willing to risk money on it, as long as the setup makes sense to me. So anywhere within this area, so price, what it means is price can from here begin to push up. The targets, what do you think the target will be? Well, this will be the target here. So price can begin to push up to hit this target, or price can maybe come down even further into this box to then push right up. So from this area here, I'm willing to look for buying opportunities. And that's one of the reasons why I'm okay looking for buys on Euro USD, but not yet. I'm not buying Euro USD like I am looking to buy gold already, right? I'm just waiting for the setup to play out. So this would be what I call a liquidity target. And then this is basically the zone of interest or the area of interest. And this would be my protected low. Okay, so yeah, this would be my protected low. Okay, so basically, for those of you who I don't know if any of you were in my class for the previous class I had on Friday, where I talked about the MTFA setup, the MTFA theorem, basically my own way of looking at the market from a standpoint of top down, from high to from a hierarchical perspective, where I use multiple time frame as basically to figure out where I am in the market and what setup makes the most sense to go into. Well, if you've not, go to my YouTube channel and watch that, and make sure while you're there, you leave like. If you're watching from the YouTube, you'll find videos here somewhere. Okay, so basically on a smaller time frame, you see price pulling back down. So price is bearish, right? But what I want to see is for price to begin to shift back bullish. Okay, I just want to see it shift bullish, and then I'll be interested in looking for that buys, because, well, it's possible price wants to go up here, but it's possible that it's not ready yet. Maybe it wants to go down even further before going up. I don't want to be. First of all, I don't hold trade without stop losses. If you don't know what that does to a trader, I'm sure. I hope you don't find out, because many times, here's the truth. The truth is, chances are, okay, let's say on a scale of 1:10, there's an 80% chance that price is going to go up here without closing below here. However, let's say 80 maybe 80 is a lot. Let's just say 70, right? Or 75. And chances are it could come back down, just go down below it a little bit and then go back up and then continue to move. Now, somebody else will say, well, I can place a buy here, no stop loss. Now, if you trade like this, remember, this is a 70% chance of happening, and this down here is a 30% chance of happening. 9 times out of 10, price will go up, right? Not out of 10 though, but you get like 7 times out of 10, price will probably go up. Now, if you take those trades, chances are you probably will not hold price till you get to this point. You probably take profit somewhere, okay? Now, if price goes up, you're happy, you make profit. But let's say price, comes down like this and then go up like this and hit here. So you hit your profit, you're happy, okay? Let's say this happened 8 times out of 10. And you're like, you see, this is the reason why I don't put stop loss. But Mr. Obina will say, if the setup do like this, place your stop loss like this. The last time I did it, price came down, hit my stop loss, and then went my way. Okay, it's true. It's true. It's true. But here's the thing. There's a time price will do something like this. It will come down and then just fall. This here is where accounts get blown. Not here. This is where accounts get blown. It doesn't happen as much, right? And so you believe this is my trading system because it works quite a number of times. But if you look at it, it's not scalable. It's not sustainable. You only need to fail once. You only need to be wrong once to completely wipe yourself out, right? And so you find out that you get into this rat race where you're making money sometimes, but you're losing money most times, or you're blowing account most times. Okay, so that is it's the reason why, just because you think, like, I'm confident that this could probably happen, doesn't mean that I will now go and trade blindly without using proper risk management. I always emphasize the point to use proper risk management in all your trading. Okay, so enough storytelling for today. Now, on EURUSD, I'm just waiting. I've not done anything on this one. The last time I took a trade was here. Before this trade, I think the last time I took a trade was somewhere around here. So I've not touched EURUSD for almost a month. I like really traded it. And now we're just waiting to see if we get a setup, because I know that we might not get a setup. If price breaks below here, I'll probably turn to looking for sales, no longer buys. Okay. So that being said, what will be our anticipation for the week? So let's just look at the 1 hour chart and see what the structure of the 1 hour chart looks like. Well, just simply looking at this, you'd see that we're making highs. We basically highs to low, to lower high, to basically a lower low, right? To lower high, to lower low, and then lower high, to a lower low, and then we broke into a higher high, right? Higher low, higher high, lower low, higher high, lower low. Basically we're just here. So price went from lower lows, lower high to higher high, like just going back and forth. So this here is what I like to call no trade zone. This is the market where this is a place where the market is indecisive. The market is just going back and forth between accumulation and distribution, and it's most likely what's happening here is orders are being accumulated. Now, what we don't know is, what I'm sure 100% is that orders are being accumulated here. But what I'm not sure, what I don't know for a certainty, is whether the orders are accumulated to then take price higher, or then distributed, or to then take price lower. So I don't know whether this thing is doing, price is doing what it's doing now, so that it can then take price higher, or is it doing all of this so that it can then take price lower? Okay, so we'll wait, but we understand that based on the context of the higher time frame, we're looking for the price to come this high. So I'm waiting for opportunities to look for those buy moves. Okay, so if this were Y curve, right? So for me now, I don't necessarily trade Y curve in the sense of look for the schematics and then wait to trade the SOS, or wait to trade the UTAD or something like that. But basically, if this were Y curve, this would be the prevailing supply, this would be the selling climax. No, this would be the, what I call it, preliminary supports. This would be the selling climax. This would be basically an automatic rally, a secondary test, basically. So this would be some sort of spring. And then if price breaks above here, then that means that we are now showing strength. Now, just because it breaks above here doesn't mean it will go instantly. It could break above and then pull back down and then go. Also, it could break above, and this could be just the UTAD, the distribution for price to fake out buyers and then push price down. So you have an idea of what I'm saying. I'm saying basically this can go either way, but we have to trade. We can't just trade either way. We have to look to trade a setup that makes sense to us. So this high here, and more importantly, this high here are key for the week. So if price were to close above this high, right, while not going below this low, then you can now begin to look for buy opportunity on this. Okay. So there's nothing for me to do here on EURUSD. Same thing. I've not GBP USD. GBUSD. No, I'll leave this one. There's nothing to talk here. I'll probably talk about this one tomorrow or something. AUDUSD. So AUDUSD is basically from an area of interest, just like I showed you on EURUSD. So you can apply the same concept I just showed you there and try and see if you can spot tradable opportunities here. But tomorrow I will be talking about this one on the cutting edge class. So those of you who are at the cutting edge class should be able to join me on that. Well, so far my area of interest for the past couple of weeks have been yen pairs. So CAD yen, CHF, JPY, those are the currency pairs I've been trading, and you would notice that on the Telegram channel, those are also the currency pairs I've been giving out trade ideas on. It's simple. The market is bullish. It's showing strength. And I'm just simply looking for continuation of the move. Okay, so I sent out a trade idea here. This is a simple trade signal. There's a trade. I don't know if I sent this out to the group or if it was just one I took. But this one now, I already took partial on this, and I'm waiting to get position on this, right? Because of the way I look to enter the market. Okay, but this is a trade idea on CHFJPY that's set up for a buy. CAD yen is not set up just yet. I'm still waiting for that for the buyers to come in, and we'll see how that move. AUD yen is AUD yen is doing its thing. I'm in a position here. I took a win here. Then price came back and hit me out at stop loss. And well, I'm just doing nothing here with this one. Let's see. Yeah. Okay, let's look at the NASDAQ. Let's look at US 100. Okay, yeah, not USD, US 100. The US 100, US 30, NASDAQ have all been bullish on them, right? So we had some good trade setups on this one. Let's go to the daily time frame here. I sent out some trade ideas on the Telegram channel, I think last week or the week before on NASDAQ. It was a good trade. It went way exactly as we anticipated. We also had some losses on US 30 as well and US 100. Yeah. Price did not react as exactly as we wanted, but price still went on bullish. I think I can find that here. Yeah, this is it, right? So some of you would have, those of you probably on the Telegram channel will remember this. I had the bullish trade idea here, anticipating the break and continuation. Notice what price did. Price broke down, but still went our way. Okay, so now I took a loss here, right? But I was able to get involved in a trade. I think the trade here with context and also another trade here. Now I didn't send out those obviously, but you get the idea. Now, this was what I was talking about. Somebody will say, you see, the market came down, took me out, and then went my way. Well, I took a loss here, and it's not the end of the world. And fortunately, in this particular case, I was able to get involved in another trade here, and I made back my profit and all. But more times than not, I'll take a loss here, and price does not come. Price just eventually now go my way, and I'm not in the trade. It's fine. It's part of the business. It's part of the game. But what I know is I can walk away from my MT4, walk away from my chart, and don't even have. I will not flinch because I'm worried that price will just keep going down. You get the idea of what I'm saying here, right? Okay, so US 100, US 30, the NASDAQ, they're all bullish. They're all bullish markets, right? So in this particular one, probably wait for price went on the lower time frame has come back bearish. So just wait for the bullishness to come back in. Wait for let's see, wait for price to come and close above this high, and then you can begin to look for those buys to take it upward. Okay. So yeah, I think that's basically what we'll be able to cover, or what my time permits me to discuss with you guys today. It was fun talking to you guys. I'm sure some of you have questions. I'll just take one or maybe two if you want me to look at it. So just drop one instrument you'd probably like me to look at, and I'll just quickly look at that. Drop your type that in the chat box. Maybe one or two. Probably take one. Or we'll call it a day for today. Okay. Yeah, we've been here for almost an hour. Okay. Any questions? Hope you guys enjoyed the class so far.
Yes, thank you.
Okay. Okay, so well, that would be all from me. I'll see you guys tomorrow's class. Until then, do have a wonderful day.